Okay, I didn't do an example for problem 1 of the homework. Most of the information is contained within the study guide. If you feel like you need any further details, they would be in the text. But that one I think you'd be fine with. But this is, first of all, the example for problem number 2. And I did, when I sent you the example for problem 2, I did work the entire problem out with an example, so I think it'll be clear. But I just wanted to show you what we're doing in problem 2. To determine our adjusted cash balance per bank, we're taking our cash balance per the bank statement, adding deposits in transit. Those would be deposits that you would have made to the bank, but they haven't shown them yet, so perhaps it's just too soon. And we're going to subtract outstanding checks. That's checks that perhaps you wrote to whomever, and they just haven't gone and cleared through the bank yet, so perhaps whoever you wrote them to just hasn't cashed them yet. And that's how we get our adjusted cash balance per bank. For this problem, for our adjusted cash balance per books, we're going to start with our cash balance per books, subtract any NSF checks, which are insufficient funds checks. So that means a client sent you a check, you deposited it in the bank, and they did not have the money. So the check never went through. And we're going to also subtract any bank service charge. In problem 4, which is similar, but in problem 4, they have a safety deposit box fee. Basically the same thing. It's something we're going to subtract. And that will give us our adjusted cash balance per books. If you turn to problem 4 example, which again I gave you a whole example, so you should be able to follow that. But I wanted to point out one thing to you. For example, to get the cash balance per books figure, that figure that I got, the 14,000, if you look in the information I gave you for Bot Company, gives the balance on April 1st and a balance on April 30th. That's your April 30th balance, so it's the end of the month balance. Something else I want to point out to you, what you're going to have a couple more procedures to add to determine your adjusted cash balance per books. We're going to have to add the collection of a note receivable, which is similar to an account receivable, and interest earned. So we earned some interest, so we're going to have to also add that. So that is basically the slight difference. I am going to go ahead and talk a little bit about the journal entries for 2 and 4, because you have a little bit more in 4, but they're similar. First of all, the first thing I want to talk about is that NSF check. When you get out a check that's insufficient funds, you have to go back in and debit accounts receivable again and credit cash. And let me explain to you why. Let's say when we first initially received this accounts receivable, let's say this is our only accounts receivable. We went in, and when we first performed the service, we debited accounts receivable for $960 and credited revenue for $960. Right? Our transaction was complete. Then we got the check from them. So we went ahead and credited accounts receivable, right? It would now have, for example, a 0 balance. But we credited that because we no longer had the account receivable. And of course, we would have debited cash. What we now have to do is we have to go in and debit accounts receivable all over again, because this account receivable is now owed to us again. We have to credit cash because we don't have this money. So that's why we're making that entry, and we do it several times. So I just wanted to go through it once so you understand it. Also, the notes receivable, as I said, it's very similar to an account receivable. So again, since we received it, we're going to debit cash for the amount of cash we received, which was $1,010. We're going to go ahead and credit that note receivable because we need to get it off our books, right? It's no longer owed to us. We're going to credit that for $1,000. And then we also have interest revenue, and like any other revenue account, and to increase the revenue account, it's a credit. So that's where that comes from. Miscellaneous expense, like any other expense, of course, we always debit our expenses. and we'd be crediting cash because we're paying it. So hopefully that explains 2 and 4 sufficiently. If you do have questions, call me. And if you have any questions about one that I'm not sure, please call me or write to me, and we can go over that. But now what I wanted to do is go through the problem 3 example.